The broadcast is now starting. All attendees are in listen-only mode.
Well, good morning, everyone, and welcome to our Wednesday morning DTS demo/trade room. My name is Eric Senft. I'm going to be your host for the next hour and a half or so. Just a moment while I get you my monitor. For those of you who have never been to our demo room, welcome. Oh, and before I forget, let me mention this right off of the top, that Adam is running a special this week only on Indicator Warehouse's indicators. I guess he was feeling sentimental, so he did a Valentine's special. That link I just sent everybody, that's the link that you can follow to the Premium Indicators page, and I'm going to show you some of those indicators this morning. These are indicators which you can use on any chart, regardless of the format, whether it's a DTS chart or whether it's a time chart or tick chart or whatever the case may be. And if you enter that other code that I sent, VAL, all in capital letters, followed by the number 20, you will get a 20% discount. So what could be wrong with that? But this morning's session, we're going to take a quick little overview of the DTS tools. For those of you who have sat in on the public room before, please bear with me. Some of this stuff is going to be familiar to you already, but for the benefit of those who are new to the room, I'll take a few moments, I'll go over some of the things, and if the markets are cooperating, we might even be able to pick up a trade or two this morning. Goodness knows they weren't in a cooperative mood yesterday. Nothing but a lot of thrashing about, and just not a fun day to trade. We managed to do not too badly. We did pick up a crude oil trade at the end of the session, but the stock indices were not at all cooperative. We spent a little bit of time just doing nothing. All right, so this is the DTS system. Now, the DTS is actually comprised of two separate systems. First off, we have the DTS, the Diversified Trading System itself. And it's diversified because what we are doing with the diversified system is we're actually looking at the market from three different points of view. A lot of people don't realize this, but the market is not always the same. Sometimes the market is going to be more choppy. Sometimes it's going to trend well. Well, what we've done is we've actually designed tools specifically focused at the needs of each market environment. So you can quite literally take advantage of the market regardless of what prices happen to be doing that particular day. I'm sure you've all experienced situations where whatever signal system you're using, it works sometimes, and then the next time it doesn't work, and you're beating your head against the wall trying to figure out, well, it worked so well last week, why is it not working so well this week? Well, it's not working so well because the market conditions have changed and you're trying to use the same tool in a different environment. It's like my grandfather used to say, if the only tool you have is a hammer, then you tend to see every problem as a nail. And this is where DTS comes in, is we have three different hammers for three different nails. So in the top left corner here, this is the Hawk Micro Scalper. This tool has been designed to pick up scalping signals. Now I know it looks a little bit confusing. I'm going to walk you through it. It's actually been, all the tools have been designed to be easy to use. It may not look that way right now, but trust me, they really are. Here, the top right is the Falcon Swing Trader. And the Falcon Swing Trader is a very popular tool, and as the name suggests, it has been designed to help identify swing trades. Bottom left, this is the Eagle. This is our Eagle Trend Trader. And this tool has been designed to pick up trending signals. Now, each of these tools, actually before I get into the signal generation, let me show you the last tool. This is the DTS Raptor. This is the latest addition to the DTS assortment. And the Raptor is a standalone system, and it incorporates components of the other three tools all into one. So you're going to notice we have this same band back here that we saw on the Eagle. We get the tricolor bars, which is characteristic of the Hawk, and we also are using a lot of the signal generation out of the Falcon swing trader, so it incorporates all three into one. Now, the way DTS works, and what we're looking at on this monitor here is the NASDAQ. I'm also watching crude oil and the mini Dow on another chart. And all right, I see, before I get into the signal generation, is anybody else having audio problems? I have a question here from somebody. It seems they're experiencing audio problems. Can somebody just give me a sound check? No? Everybody else okay? All right, thank you, folks. All right, I'll just let them know so that they can try to log in and out. And hopefully that will fix them up. Okay. Now DTS, regardless of the tool, regardless of whether you're using the Hawk Scalper, Falcon Swing Trader, Eagle Trend Trader, or the Raptor, they all generate signals exactly the same way. And the way the signal generation works is when the signal is starting to print, you're going to get a warning dot along with an audio alert. So the system will say scalp, and then you know to look at your scalping charts or swing or trend or whatever the case may be. Then you're going to notice that your chart is printing a warning dot. That tells you that part of the signal parameters are being met. When all the signal parameters are met, you're going to get a triangle and a hash mark, which is a suggested entry. It doesn't mean you have to take the entry at the hash mark, but hey, these are computers we're talking about, and computers need to know everything in a specific fashion. So here's a good example. This is actually a signal we refer to as a first micro-macro cross signal, one of our high probability signals that we look for. And you can see we get our warning dot. A few moments later, we get our triangle and hash mark telling us that we have a complete signal. And so this is a signal that we can take, and you can see we had a nice little follow through on that. This is our scalping tool. With our, before I leave that, a big deal on DTS is confluence. So most of the time, and there are a few exceptions to this, but I'm trying to keep things simple for everyone. Most of the time what we're looking at is we're looking for confluence in the signal. So what I mean by that is we're looking for red bars. We're looking for a red signal. We're looking for red trend lines, and we're looking for a red filter. This filter down here helps gauge market momentum. So ideally, we want everything to be red, and we sell. We want everything to be green, as it is back here, and we buy. Those are your highest probability signals. And with the Hawk, as a matter of fact, the highest probability signal is what we refer to as the first micro-macro cross. So the micro line is this thin one. The macro line is this thick one. When those two cross over and everything comes into sync, green bars, green trend lines, green filter, green signal, you buy. And it's a very high probability signal. You can see it took a little bit of heat here, but eventually went up to find our profit target. And even here, just pre-market, we had a first micro-macro cross to the downside. So very high probability signals, a signal that I almost take without exception. The other thing before we leave the hawk and go on to the falcon, the hawk is very good at identifying market choppiness. People always ask me, how do you trade market chop? Because let's face it, the markets do get choppy. They've been choppy most of this week. And it can be a little bit frustrating. Well, the way you trade a choppy market most of the time is just to avoid it entirely. So that begs the question, how do I know the market is getting choppy? The hawk is very good at this in that it introduces these yellow bars. And you'll also have these yellow bars on the Raptor. But once you see a lot of these yellow bars printing, notice the frequency, how quickly they're starting to print. It's not like you print a yellow bar here and then way over here you print a yellow bar. We're getting yellow bars sprinkled in everywhere. That is a warning sign that the market is actually in a choppy mode. And our filter breaks up quite a bit, especially through here toward yesterday's close. A lot of choppiness. See, and here's yesterday's session too. Look at all these yellow bars. Now that's not to say we still didn't generate a quality signal or two. When the market finally broke out, here's a first micro-macro cross, went up, hit our high probability profit target. But for the most part, if you're looking at a chart like this and you're getting all these yellow bars coming in, that's an early warning that the market is going to be hitting a little bit of a choppy phase. All right, so that's the easiest way to avoid trading choppiness or getting involved in a choppy market. Or if you recognize that the market is choppy, as it is again this morning, look here again, more yellow bars. Just a few moments after hitting our first micro-macro cross lower, here we come, yellow bars to the upside. Well, you can take steps to protect yourself, right? You can trade less risk. You can postpone your entry. There's different things that you can do when the market is behaving this way so that you don't get suckered into a potentially bad trade. Part of the problem, I think, is because the NASDAQ has been at odds with the rest of the stock market. Sometimes the NASDAQ is going higher and the stock market is going lower, and we're having these types of issues where we're getting a lot more choppiness. All right, this tool here is our Falcon Swing Trader. Very popular tool, very powerful tool. The Falcon Swing Trader is designed to pick up midterm swings in price. And here too, you're going to notice that the signals generate the same way. We get a warning dot when the signal starts to generate. And then when the signal is complete, we get a triangle and hash mark. This one too has an audio alert. It just gave me the swing audio alert as we're printing another warning dot here. Now the Falcon works exactly the same way as the Hawk in that we're looking for confluence. The strongest signals are going to occur when everything is in sync. So here we have a red trend line. We have a red signal. You can't see it very well because the triangle is obscured by the trend line, but you can take my word for it, or pardon me, the warning dot. The triangle is right here. We have a complete signal and red filter, red bars, red signal, that's our sell signal. Here we're working on a trend change signal to the upside, so now The bars are green, the trend line is green, the filter is green. We're waiting for a green signal to print, and that might be a buying opportunity. The Falcon, not too bad at showing market choppiness. We pay a lot of attention to this trend line when we're trading the Falcon. If you're trading the same direction that the trend line is going, you're going to be on the right side of the trade more often than not. But notice the filter here, our swing filter on the Falcon, also breaking up quite a bit. The trend line looking very much like a roller coaster. So that's really telling us that there's some choppiness going on here. It's going to be tough slogging in this market. But again, not that we're not generating any quality signals. Here is a very high probability signal in the Falcon. We call this our late filter entry because what happens is the filter goes out of sync, but the rest of the trade does not. In particular, our trend line. Our trend line stays red, our filter waffles, goes green, then red, and then we print a sell signal. Very high probability signal in the Falcon. Again, those are one of those signals that when I see it, I almost take it without exception. If I can't figure, I need a really good reason not to take that signal. It is that strong. Let's see if I can find you another one. I think we were going through crude oil. Let me pull over the crude oil chart because I believe yesterday's crude oil had a fair amount of late filter entry signals. Let me just dial over here to crude oil for a second. Oh, maybe not. Maybe I was looking at something else. But you can see solid signals like here. Oh, well, right here, speak of the devil. Here's a late filter entry signal right there. See, filter goes out of sync, comes back into sync. Trend line never changes color. This is also our trend change signal, and that occurs when the trend line changes color. It's the first signal which is all in sync, so a little bit of overlap there in the signal department. But look at that follow through. My goodness, that was a fantastic move. And then here we have late filter entry to the downside, again, with a nice move. I was obviously pointing out something else here. Here's another late filter entry. Trend line does not change. Filter goes out of sync, comes back into sync. So again, you can see just very easy to spot. Another late filter signal right here. Filter goes out of sync, trend line does not. And just very good follow through on that type of signal. Definitely one worth keeping an eye out for. So that's our Falcon swing trader. You can see very good in crude oil this morning. Here is our trend change signal. Shortly after the market opened, crude oil opened over here somewhere, gave us a solid trend change signal, and just look at that move. That would be, well, I don't know about you, that would be my day right there. That's, what is that? That's about an 80-point rally, 90-point rally. That's $800 or $900 per contract. That would definitely be my day right there. Looks like crude got busy early. Unlike the NQ, which is still very choppy, notice the difference here between our charts. It's not difficult to recognize choppiness versus crude oil chart, which is looking, this is a much nicer look. Right? Crude oil actually going somewhere today. The NASDAQ, not so much. All right, let's go now to the Eagle Trend Trader. And as you might suspect, the signal generation again occurs the same way. We get warning dots. I'm sorry, I got to roll back here a day or two because today's session not Very cooperative. Okay, here we go. This will work. So we're getting warning dots, we're getting triangle and hash marks when the signal is complete. Once again, most of the time we're looking for confluence in signal. I'm going to show you an alternate signal here in a moment. So we've got green bars, green filter. This band that you see running through the eagle, no, that is not an Ichimoku cloud. This is an eagle band, we call it the eagle band, and it gives us our directional bias. All right, so when the soft edge is above the hard edge, we're looking for buying opportunities. When the soft edge is below the hard edge, we're looking for selling opportunities. Jerome's asking, is your time at the bottom Eastern or Greenwich Mean? It's actually Pacific. I'm on the West Coast. So for those of you on the East Coast, you're going to want to add 3 hours to the the numbers you see here at the bottom. The eagle also has this little squiggly red and blue line that you see running through here. This is just an added filter. It is part of the eagle package. It's something that we've adopted recently. It's not something that you need. Mike Filiguera, who is the fellow who trades the stock market with the DTS tools, put me onto this. It's actually just an ATR line, average true range, but it's a very helpful filter. So we've been using that a little bit more recently. I told you I was going to show you a slightly different signal on the eagle. This is a signal which is unique to the eagle. And, well, since we're in an uptrend, we'll deal with the uptrend signal first. It's this one right here. It's what we call a red bar buy. And it normally comes off of a hard edge bounce. You see, this eagle hard edge is significant. When the market trades into the hard edge of the eagle, we always anticipate a reaction. We don't always know if it's going to be a big reaction or a little reaction, but we know we are going to see a reaction. If we get a red bar signal printing with a green buy signal, and our filter is in sync and our band is bullish, this is actually a pretty strong buy signal. So while the bar color is technically out of sync, everything else is in sync. And that alerts us to a great buying opportunity. Before I forget, let me mention the bar style to you, because I take it for granted now, but these bars are unique to Indicator Warehouse, and I do believe they are available at that premium indicator page that I sent you. These are called the Mean Renko bars, and I really wish they had come up with a better name than that, but whatever, that's what they call them. They're the Mean Renko bars, and they're not mean because they're angry. They're mean because they take the mean when they're printing, and I'm not going to get into the technicalities of it. They work really well. The Mean Renko bar incorporates the best of a range bar or Renko bar, along with the sensitivity of a candlestick chart. So it becomes very obvious where buyers and sellers are at. In actual fact, when Adam first approached me about using these bars, I was reluctant because I was a 5-minute chart trader. That's all I traded. But once he showed me these, I have not gone back because they just make it so obvious who is controlling the market. So for instance, down here, we see prices come down. We see the buyers come in. They force the market up a little bit. Prices come back down and they fail. Well, right away, I know that the buyers have control of the market. So then when the band changes over and I'm printing my green buy signal, it just gives me that much more confidence to buy this market higher. Yes, you can do this on a time chart, but it's not nearly as clear as it would be using the mean Renko bars. In fact, people ask sometimes, can you use DTS on time charts? Well, you can actually use DTS on any chart style you like, whether it's time charts or tick charts, range bars. The mean Renko bars have been designed for DTS, but no, you can use it on any chart style you want. And you can see the tool still generates signals. This would be a 5-minute chart. And we're still generating sell signals. But notice it's not nearly as easy to interpret as it would be using the mean Renko bars. You can still do it. You can still say, okay, price came down, price went up, here's the failure, I'm looking for prices to rally. But look at these swings. Like, these are enormous swings. You've missed a lot of opportunities through here because, well, it's a 5-minute chart. And that is a distinctive drawback from using a time-based chart. But any chart style you want, with the exception of the point and figure chart. Yes, even things like Kagi charts or line break charts will work with the DTS system. And DTS is also powerful enough that you can use other indicators with it. So for instance, if I know a fellow who just loves Bollinger Bands, right? Has to have Bollinger Bands on his chart. And let me clean this up a little bit. Has to have Bollinger Bands on his chart. Okay, that's fine. Go ahead, throw Bollingers on there. If it helps you make a decision, then by all means, run with the Bollinger Bands on top of your chart. If it doesn't help you make a decision, then get rid of them because you don't need them. Let me see, I need to add a few more days here. Okay. And here with the eagle also, you can see our filter breaking up quite a bit, our bar colors waffling, our band waffling. So once again, it just confirms that what we're looking at here is a pretty choppy market. It's not to say we haven't generated reliable signals. Here's that red bar buy I was telling you about. Not as pretty as the other one I just showed you, but see, the market comes into the hard edge. We're expecting a reaction. The reaction came late, but it did come. Signal printed right here. Got a little bit of a burst to the upside, comes back down. Another red bar buy, another move higher, another move down, another red bar buy, another move higher, and so on. So not exactly the the best trading day yesterday, and today's not shaping up too well either. But that's all right. Unlike other people who are in there trying to carve out a couple of bucks, we know that the market is not cooperating very well today. So we wait a little bit, let things shake out. Yeah, like Michael says, it's just messy out there. Jerome's asking, does one Renko bar equal X amount of a 5-minute chart? No. Renko bars print when the range is met. So for instance here, this is the Raptor now. You see that it is set at an 8-tick brick. So that means this bar will finish printing when it prints 8 ticks, either higher or lower. This could take a matter of seconds or minutes. Rarely will it take hours, but it will stay on this time or on this bar regardless of the time. you're going to notice these little shadowy figures above and below. This is the Logi counter. Again, one of those premium indicators that you can get at a discount this week. And the Logi counter forecasts where this bar will print. So I know that if the market continues higher, the top of this bar will be 43.8550. If it continues lower, it will be 43.8150. Why do I need to know that? Well, let's pretend for a moment that we're printing a signal here. We're not, but let's pretend. If I know the bar is going to finish 43.8550, and let's say I want to enter one tick beyond that, I can set up my order, right? I can park my order there, and if the market continues higher and the bar prints, well, then I've already got my order there waiting, rather than fumbling for my order, trying to get my order in place just in case the market, goes boom like that and leaves me behind. So a lot of these things have been done so that you can actually plan or pre-plan what's going on and take advantage of the signal when it finally prints. Okay, here's the Raptor tool. Just quickly, the Raptor, like I said, is a tool that incorporates elements of the other three birds all into one. You're going to see we've got the eagle band back here to give us our directionality. The bar colors print according to the hawk. The entire Eagle Trend Trader has been programmed into this filter here in the bottom. And the main engine driving this tool is the Falcon Swing Trader. So it incorporates all the elements. It is fully customizable. Well, I shouldn't say fully customizable. There's a lot of customization available here for you. You can change cloud sizes. You can change the filter parameters. And you can also change brick sizes to accommodate different tools. That is a little bit more adjustability than you have on the DTS system. The DTS birds are pretty much locked. The programming is locked. There's very little adjustability here aside from the brick size. And yes, we did that intentionally because we got it to work and it works very well. There's about a year's worth of testing in this programming, and we know how traders like to fidget with things. So if we came from if it works, or if it ain't broke, don't touch it school of thought. Okay. Michael's asking, can we see the Raptor on crude oil? Absolutely. Let's throw crude oil on there to load. And then I'm going to show you what is perhaps the most powerful tool that you can own as a trader. And I'm not just saying that. It is going to make or break you as a trader, quite literally. Okay, just let this finish loading. My poor computer doing all these charts and the screen sharing software and the recording software bogs it down a little bit. All right, so here is the Raptor on crude oil. So here's the overnight. One of the signals that we look for in the Raptor, you're going to notice that the Raptor is not the fast tool. The Raptor actually tends to sacrifice quantity of trades for quality of trades. It tries to pick up higher quality signals. And as a result, sometimes you're going to be waiting for it a little bit. Now, some people are okay with that. Some people want signals to produce a little bit faster. If you want faster signals, you're going to need the more hands-on tools like the Hawk and the Falcon, which are designed to, pick up every nuance in the market. But the Raptor, when you get stuff like this happening, where you get a lot of yellow bars, you're into the cloud, everything keeps flip-flopping, changing about, you're normally standing aside and you're waiting for the signal to print after you emerge from that. And once again, we're looking for confluence. We're looking for red bars, red filter, a bearish band. This would be a sell signal. And normally with the Raptor, we try to get on these signals early. Here's a little bit of a trend change signal, and there's our trend change signal coming once this band has flip-flopped. And so once again, we have red warning dots, red signal, red bars, red filter, bearish band. Big run up the other day. Let's get back to the beginning of it. See, once again here's that whole mess. Everything's out of sync. So not really a time that we're interested in getting in. And then when the market finally does get into sync, right here, we've got the blue bars, blue filter, blue band. Even if you missed that one, the signal printed again a few bars later. So we're looking for confluence, and normally there tends to be a pretty good result. Let me see if I can find you one more. I'm looking actually for a double pullback signal, which is a pretty reliable Raptor signal. But crude oil hasn't given me one for a little while, which is odd. Okay, I'm not going to waste all your time looking for one, but essentially it looks very similar to this, where when the market starts to retrace into the band, we expect a double pullback. So we expect two pushes into the band. A lot of times it'll go snuggle right up to the hard edge and then come out of there. And we're looking for that first signal to print when it comes out of there, for the first all sync signal. Well, you could take that one. That's a variant of it. Here's the truest signal a few bars later. Red signal, red bars, red band. A little bit of a move lower. Certainly enough that maybe we could have done something with our stops, or at the very least incurred a small loss, depending how we manage this trade. All right, so let's take a look at what crude oil is doing currently. Working on a double pullback. See, we've pulled in here, looking for this second push lower. Again, we're getting a lot of yellow bars, a little bit of flip-flop. Might have to wait a little bit on crude oil here. And if it comes out of here and prints a blue signal, then that would be a buying opportunity. So right now, crude oil a little bit more sideways. I'm going to go back to the NQ because I want to show you something about this tool here called the Trade Manager. The Trade Manager is a very powerful tool. Michael is asking, how much RAM do you recommend to run a DTS and Raptor? I don't have anything special computer-wise. I certainly don't have, one of the high-end trading computers. Mine is really just out of the box. And let me see if I can read what's on the side, what my RAM is. But like I said, you don't need anything extra special. I am running an i7 processor with 2 gigabytes of RAM. So that's a fairly common system nowadays. Anne is asking, are the signals as clear live tick as they are looking back in the chart? I find most indicators lag. Yes, Anne. Um, short answer, yes, they are. What we do in the demo room is, because there's always new people in the room, is I try to go over the tools a little bit, and I'll show you, signals that we consider high probability signals, like this first micro-macro cross signal. If there's time, we'll try to do a little live trading, providing the markets are cooperating, which, you know what, if I'm doing live trading today, the way the markets are, I'm probably going to wait for the market to get outside of this range, right? I know the market's choppy. My bar colors keep flip-flopping. I've identified the fact that it is choppy. I can identify the range that it's in. I might not take a signal until we get outside of this range. So I'm going to demo a couple signals for you just so you can see how these tools work. But honestly, I don't think the NQ is going to give us a tradable signal. Not right now anyways. See, here we are again back into yellow bars on our scalping tool. That immediately scrubs any signals that I was looking at taking. But yes, they develop, this is a live data stream. And when we are in the trading room, we do take live signals. The trading room is partly a call room and partly an education room. And by that I mean I will take the time to explain why this signal is better than this signal. And while I'm doing that, we may miss a signal in another market. But the whole point of the room is to teach you how to use your tools. It's not just to give you trade call signals. And the reason we do that is because the room is not continuous. I take breaks in the schedule. We're running the current room 3 months, but after 3 months, I'm going to take a break. And, if you're relying on me to do all your trade calls for you, then you might be a little bit out of luck for a few weeks or a month until I come back. So we try to educate you, try to get you to use your tools, show you how to use them, get you confident in using them. But yes, we also do signals. And definitely, if anything looks promising this morning, I will point it out to you guys, I promise. Oh, Anne says, the reason I asked is most of the time live, I see the arrows appear and disappear as it ticks. It depends, because there's a lot of parameters that need to be met before the signal actually generates. If the parameters change, yes, the signal will disappear. But right now, for instance, here on the Hawk, we're getting a warning dot. That warning dot will not disappear. If the market continues higher, I might get another warning dot, or the warning dot will shift, but I do have a warning dot here. I do have part of the trade parameters being met. So there's actually a lot going on in the background for each of these tools, more than actually what you see. But I wanted to go over this Trade Manager tool. This is the tool you see here on the right-hand side. This is a very important tool to your trading success, and I don't care whether you're using DTS or whether you're flipping a coin. This tool is going to help you be more successful as a trader. You see, most traders, when it comes to trading, they only focus on the entry signal. They only pay attention to their entry signal, and they think if they have a losing trade, well, there must be something wrong with my entry signal. And so then they start tweaking their entry signal, and they go through their indicators, and they start throwing, everything on there that they can come across, and they plug it all in, and they say, okay, now I'm good. Oh, I hope I didn't break anything. chance here to load. There we go. And so now they say, okay, well, I have all these different indicators on here, and it works until it doesn't work, right? They'll all work sometimes, and then sooner or later the signal will fail. And then what do most people do rather than say, well, that's trading, is they go throw another indicator on until they get so much stuff to look at that they can't make a trading decision. So what we've done is we've actually gone the opposite way, where we've tried to scale things back, tried to keep things as simple as possible on your entry signal to make it easy to interpret your entry signal. And then we've also given you the other two legs to your trading stool. You also, not only do you need a good entry signal, but if you're going to be successful as a trader, you need a way to manage your position, and you need correct money management. A lot of traders will recognize the need for a good entry signal and a need to manage their trade. So they'll incorporate some sort of stop strategy. But very few traders will actually incorporate all three principles. And all three principles, you need all three principles if you're going to be successful. The Trade Manager here has 16 different stop strategies for you to choose from. These blue dots here represent where your stops would be as Trade Manager would manage your trade. And you can see we have 16 different systems here to choose from. Everything from something like the chandelier, which is very conservative, to, say, parabolics, which are more aggressive. And all these are fully customizable. You can change the settings. You can make them more or less aggressive, depending on your needs. The nice thing about the Trade Manager and these stop strategies is that if we were in this trade, Trade Manager would manage my trade for me. So I can quite literally put this trade on the shelf and go look for other opportunities, which is huge, right? When I'm doing the profit run, or when I have done the profit run in the past, and the profit run is only when I'll try to trade for 2 months and see how big of a number I can run up in a couple of months worth of trading. I will trade 4 markets at the same time. That's a dozen different charts. Now, it's not as cumbersome as it sounds because I have the audio alerts, right? So if it says scalp, I only need to really look at 4 charts and see which one is printing the warning dot, or likewise for swing and trend. But once I'm in a trade, I set my Trade Manager and I can forget about it. I don't have to worry about managing that trade any longer. Trade Manager will do it for me. And like I said, I can set the parameters however I want. But perhaps even more important than that is this money management feature right here. This is the Risk Manager portion of Trade Manager. We have 2 settings. We have a manual mode, which will default to the quantity up here. Normally it's set at 1. Or we have a percent model, risk percent. And by default, it is set at 1%. I dial mine up to 2%. And the Trade Manager prevents me from risking more money than I can afford to lose, because it will always risk just 2% of my account. It also allows me to split up my profit objectives. Right now, I'm all in, all out. So target 1, I'm taking 100%. But let's say I want to split that up. I want to take half at target 1, which I have set at 10 ticks. And let's say I'll leave the other half on as a runner. Quite simply, with the couple clicks of a mouse, I can set up that trade. And Trade Manager never allows me to risk more than I can afford. Now, Trade Manager is saying to set up this trade this way, it's going to cost me $425 if I'm wrong. Now, don't let that amount freak you out. This is an amount that I can afford. This is 2% of my trading account, right? If you're trading a $10,000 account, Trade Manager, and you're allowing 2%, Trade Manager will only allow you to risk $200. But the point I want to make, and I'll be brief about this, is what most people do. Most people try to do a risk-reward ratio. They'll look at this and they'll say, oh, well, there's a resistance down there, and I need at least a 2-to-1 risk-reward ratio. So I'll set up my trade like this. I'll set up my trade like this. Doggone it, never mind. Sorry, I forgot. I'll set up my trade like this, and I'll get my 2-to-1 risk-reward ratio. Not quite. But what ends up happening is, yes, you're risking a little bit less here, but you're making your trade so tight that you're probably going to get stopped out before you even get anywhere close to your profit objective. By using a risk model, your risk never changes. So whether I make my trade really tight, like this, notice the risk, $475, or if I make my trade a little bit looser, notice the risk, $425, still approximately the same. Or let's say I choose to risk it above a swing high. Oh, I need to go, I'm right on the cusp there. Let's try it like this. Notice that, $435. Or what if I choose to risk it way up here? Oh, I can actually go a little bit further still. I'm trying to get it up to $400 again so that you can see. All right, close enough. Notice the risk amount never ever changes. But probability-wise, which trade has the greater probability of success? Obviously the one with the bigger stop, right? But notice I'm never changing my risk amount. My risk amount is always approximately the same. So whereas most traders strangle their trades by trying to make them too tight, by using the risk percent model, you're never risking more than you can afford to lose, and you're actually giving this trade a chance to work out. Let's see, would we have hit our profit objective yet? No, not yet. Oh, there we go. Hit our profit target. And if we were all in, all out, we would have just banked $150. Well, you don't need to do that too many times in a day to, make it a worthwhile day. You do that 2 or 3 or 4 times just on this one tool, that's $300 to $600, depending, of course, on what your account size is. Now, if I had done that a little bit closer, let's say I set it up like this, the risk amount is the same, but notice what changes is the quantity. I was trading 3 contracts before, and for the same amount, with a tighter stop, Risk Manager says I can actually trade 8 contracts. But a very important concept that, well, actually, you need to get a handle on if you intend to be a successful trader. Like I said, most traders are strangling their trades in an effort to keep them too tight. Oh, and let me show you one other thing. Those of you who have heard me talk about this before know I'm no fan of risk-reward ratios, and this is why. Most people looking at a trade like this, and they'll say, well, ideally I want to enter here, and ideally I'd like to risk it up there above the swing high, but there's no way there's enough reward here. So what do? Is they strangle the trade, right? They bring it in really tight and hope and hope and hope that the market doesn't look back. Well, what ends up, or they pass on the trade, right? They say this is how the trade should be, the reward nowhere near what the risk should be. So they say, oh, forget it, let's pass on the trade. What traders like that forget is that trading is a lot more about probabilities. You need to focus on the probabilities of the trade. And they end up passing on perfectly good trades. You know, you pass on this trade, and it isn't until hindsight that you look back and the market's way down here, and then you say, oh, look, that's what that was. That was a test and retest of the support area, or the second wave, or a 5-wave Elliott, or whatever, and they see all of it in hindsight. Well, trading in hindsight is easy, right? And trading in hindsight obviously doesn't make you any money. And I'm not going to beat this point to death because many of you know I can get off on a tangent when I start talking about risk-reward ratios. But let me just sum it up by saying trading is more about probabilities than risk-reward. You want to focus on high probability signals, like a first micro-macro cross signal, where you can take the signal with a great deal of confidence and know that the market's going to move in your favor, all right? Rather than look at it and try to manufacture some sort of risk-reward ratio, which never works. And, you know, I used to be in the same camp. I came from the same school of thought everybody else did and said, yeah, risk-reward ratios, that's what you got to do. But no, it's not. Okay, I see there's a few questions here, and I want to get to them before I get too far along. Jerome is asking, before you go into the trade manager, oops, sorry, Jerome, can you show the Euro USD, British Pound, US franc, US yen from midnight last night to 10 a.m.? Well, I'm not sure I have all those loaded, but you know what? I can show you. I'll show you what I can. So let's start with the pound. This will be the futures version. Of the pound US dollar pair. I'll just give it a moment to load. And please don't let me forget to show you some of these other tools like the support and resistance lines, the day ranger, and the trade forecaster. All right, the Raptor, I don't want to. Come on, Raptor. There we go. So Jerome was looking from the London Open to around 10 a.m. All right. Well, here's the London Open last night. This is on our Hawk scalper. We got a first micro-macro cross in the pound. Wow. Nice progression higher there. Didn't even get a single pullback through that whole run. You can see the trade manager had you use a lot of times I'll default to the ATR strategy. Would have held you in until just before, a little before the North American Open. So a nice little move there. Let's go to yesterday's London Open, which was somewhere right around here, a little messier. First micro-macro cross to the downside. You can see everything comes into sync, goes out of sync, right? Filter, bars, trend lines, everything goes out of sync, comes back into sync right here. Not as pretty as this morning, but still enough that we would have at least hit our high probability profit target. We do have high probability targets for each of these tools. And you'll be amazed how often the market will hit its high probability target only to watch the market reverse or at least pause. All right, one more day. Here's the London Open right about here. market falls a little bit. This is unusual that we didn't print a signal through here, but it can happen, as you can see. The signal printed late, printed right here, took a little bit of sideways action, but eventually fell off. So British pound today is the day for trading the British pound. There's the hawk. I'll just quickly go over the falcon and the eagle. Well, we did get an early trend change signal here, but this one honestly is a little bit more difficult to identify. It's something that we would base a little bit more on the price action itself. It's what we call an early trend change signal. Normally, we would see the falcon fire a signal somewhere through here. You see these bars with these tails on them? This was the falcon trying to generate a signal. Now let's take a look at the eagle. The eagle gave us what we call a rule of 3 trend change. Again, it's one that I would have probably just used as an early warning. I would have waited for the signal to print, but we didn't get one. You see these daybreak lines here, how close they are together? That's telling me that the brick size is a little bit too large for the British pound. If I dial down the brick size here, I know I'm going to get a signal printing right about there. Most of the times we don't need to adjust the brick sizes. The default brick sizes work for most of the markets, but when your days start to print like this, that tells you that your brick size is a little bit too big. All right, just quickly look at the Raptor. And yeah, I wonder, where's my daybreak here? No, the brick size is okay. We did print a signal right here. This is also like our rule of 3 signal. This is our counter trend signal. But I would have thought that the Raptor would have given me a signal right here when the band flipped over. That's odd. It doesn't usually happen like that. But as you can see, it is possible. All right, so there was the pound. Let's take a look at the euro. And I can also do the yen. I don't have the, what was the other one you asked for? You asked for the US Swiss franc. I don't, oh, maybe I do have the franc loaded. Bryce is asking, do we ever plan on creating these systems like the Raptor for Thinkorswim? We've thought about it. The problem is that this is actually some pretty sophisticated software. And right now, NinjaTrader is the only platform that's robust enough to for the software to run on. I'm not a programmer. I don't know all the ins and outs, but that's what they tell me, is that as far as the programming goes, that's the problem they're having with some of the other platforms. But yeah, we are looking at options. But right now, NinjaTrader is the one that has all the pieces together. Okay, here's the euro from this morning's open, London Open, right about here. First micro-macro cross to the downside, so a little progression there. Macro pullback signal, which is another one of our signals. A little bit of move lower there. Let's take a look at yesterday. Red bar buy, which very often I'll just use as a early warning. First micro-macro cross right there. There's our high probability signal, and you can see that had a nice little follow through. So there's the euro. Let's take a quick look at the euro on the Falcon. A little bit better than what we saw in the British pound. Right here we have one of those late filter entries, right? The filter goes out of sync, comes back into sync, high probability signal. Here's another late filter entry. I will mention that we normally only like to see a couple late filter entries within a trend. If we start seeing a lot of these, that actually is a sign of weakness. It starts telling us that the trend is starting to break down a little bit. Here is yesterday's session. Early trend change signal, again, not a signal that I'm really fond of taking, but the proper trend change signal came a little bit later right here, and good follow through out of that one also. You're going to notice that some tools like the Hawk are going to signal a little bit earlier. Other tools like the Falcon and Eagle might signal a little bit later, but it's because they're looking for different parameters on the trade. Here's the Eagle. Once again, you can see the daybreak lines a little bit close together, so my settings are a little bit too high as far as the euro is concerned. I would have to dial down the brick size here. But we did get a trend change signal right here, and it looks like the euro is working on perhaps moving lower. But with an adjusted brick size, I know I would have generated something a little bit earlier here. We do have a rule of 3 counter trend signal right here. So there was an opportunity to get in on it earlier, or if you used it as an early warning, here would be your signal. And now the Raptor. Well, here's our proper trend change signal right here. The band flipped over. Here's our trend change. So if you were trading the Raptor, you would be short the euro right now. Oop, you want to see it from the overnight. Here we go. Here's a double pullback, which failed, goes into the hard edge, and then here's our trend change signal to the upside. So that was a solid signal. Let's go back another day. Here's our counter trend signal with the Raptor. Here's our first with trend signal with the Raptor. So the Raptor, not too bad. Hit a couple of targets there. And let's see, you also asked for, we'll do the yen, and then I'll get to a few more questions. Okay, Hans has got a question about system add-ons, which I will talk to you about in just a moment. Okay, just really quick, let's take a look at the Hawk, or pardon me, the yen. First oops, sorry, that was still the euro. I thought it looked familiar. Here we go. Okay, daybreak lines a little bit close together. This is supposed to be our scalping tool. So unless you wanted to use this more from a position trading point of view, we would have to dial down the brick size here somewhat. But even if we didn't, here was yesterday, first micro macro cross signal here. With a smaller brick size, I know I would have generated one around here somewhere. I have a feeling that the Falcon and Eagle are also going to need adjustment. Yes, they are. See, our daybreak lines are coming a little bit too close. So we're not going to bother with the yen on that, but let's take a look just quickly here on the Raptor. Same thing, they're not highlighted, but there's the daybreaks there. So we're getting a little bit too crowded. I'd have to adjust the brick size a little bit, but we're not going to do that right now. Let me dial back here the NQ, and I'm going to get to Hans's question. Hans asked, when I'm going to buy one of the systems, do I also get several add-ons as extras? Which system add-ons are really necessary or essential? Okay, as far as the packaging goes, I'm not the guy to ask about that. Adam sometimes bundles things, and I am unfamiliar exactly with how the packages are put together. But if you don't already have Adam's email address, there it is. You can email Adam at indicatorwarehouse.com, and he will give you all those particulars. And let me go over the system add-ons here so that you can see what they are. This little tool up here in the corner that I have displayed on my Hawk, this is called the Day Ranger. Now, these tools that I'm about to show you, these next three tools, can be used on any chart. It doesn't have to be a DTS chart. It can be a time-based chart or a tick chart or whatever. These are universal tools. The Day Ranger plots the daily range relative to the average range. This was actually developed by Omar, who is our Forex guy. He uses DTS to trade the Forex markets. And what it does, it gives you an idea as to how far the market has come today, how far it might go. You can see whether the ranges are declining or whether the market is expanding. Right now, the average 30-day range for the NQ is about 240 ticks, 150 for a 10-day, and only 120 for a 5-day. So it seems like the market is contracting a little bit. Yesterday's range was 102, so as far as the averages go, it's contracting even less, and today's range so far is only 63 ticks. There's several ways you can use this. Sometimes I like to use this as for setting profit targets. So for instance, if I know the average range, say, is about 100 ticks, and let's say I want to take 20% of the average daily range as a profit objective, well, then I would have a 20-tick target. Or let's say I want to risk 20% of the average range as a stop loss, then I would have a 20-tick stop loss. And of course, I can adjust that accordingly. Here on the Falcon, I have the Ultimate Support and Resistance Suite. It's an assortment of 21 support and resistance lines, which are based on price action. They are not Fibonacci retracements. They are not pivot points. If they happen to coincide with a Fibonacci retracement or a pivot point, that is more coincidence than programming. I'm quite proud of these. They took a long time to develop, and they seem to work very well. Omar, who I just mentioned, really likes them. He uses them as profit targets and confirmation tools. The gold line here in the middle is just that. It's the middle line. It tells me that there's 10 lines above, 10 lines below. Generally speaking, if the market is below this line, we are more bearish. If it is above the line, we are more bullish. We have a blue line above, which is primary resistance, and a blue line below, which is primary support. So these tend to be your three strongest lines in your assortment. Once the market gets beyond these lines, then you're going to encounter secondary resistance and secondary support lines, where we would expect to see some sort of reaction. And let's see, how was yesterday's session? Oh, yesterday was pretty good. You can see the market broke the primary resistance, and look at that, went up to the next resistance line, hit it right on the bean, came right back down to the primary resistance, rallied up, hit it right on the number again, came right back down. Here the market rallied off of the median line, went through the primary resistance, came back down, and came right back into the median line. So you can see they're fairly reliable lines. And like I said, Omar likes to use them for profit targets and also for confirmation tools. So in other words, if there's a signal, for instance here, we've gone through the median line, we're printing a signal, that is a signal that he would have a little bit more confidence in, because now we have the median line to support, right? So he might set it up where he enters there and runs a stop below here. And then I do know Omar likes to use these levels once we're through as places to run protective stops also. Here's a late filter entry signal to the downside, and we're through the primary resistance line, right? The signal prints right here. And so he would use the median line as a profit objective, and then once below that, he would use this line as a profit target. So that's just one example of how you can use these lines. There's lots of variations, especially if you're using time charts. A lot of people will take a signal that prints through one of the lines. If the signal closes above the line or below the line, they'll take the signal accordingly. That's another way you can do it. But yes, this is the ultimate support and resistance suite. And once again, it is something that can be used on any chart. Here on the Eagle, I have the Trade Forecaster. And the Trade Forecaster tries to give you an idea as to what the market environment is and what the next market environment will be. At the moment, you can see that we are in scalp mode. And yeah, pretty much nailed that one. The market's definitely in scalp mode, and it says it's going to be in scalp mode for about another 34 minutes, after which time it's going to enter a trend mode. Well, I certainly hope so. Now, the trade forecaster works much in the same way as a weather forecaster trying to forecast what today's weather will be. Fortunately, trade forecaster tends to be a little bit more reliable. But, you know, the weatherman will look at history, right? They look at cloud patterns. They'll look at wind speed and barometric pressure and humidity and a whole host of other factors and try to say, okay, last time we had this mix of variables, the weather was this. And Trade Forecaster works in a similar fashion. It looks into the history of the chart and it says, okay, last time we had these types of variables, this is what the market did. So it analyzes a lot of what the market is doing, and then it tells you this is what it is, and this is what it is likely to be next. So very helpful tool, and again, something that you can add on to any chart. I don't have an add-on for the Raptor yet. Hans was asking which one would I deem the most essential? Well, it really depends on you. Like, they all have their pros and cons. I'm drawn a little bit more to the support and resistance lines, but that's because I'm a support and resistance trader at heart. But no, there's videos for each. They all have their advantages. So it really depends on which one you feel most comfortable with. Hans is also asking, when I buy a program, is it fully installed on my PC, including the necessary and differential tick bars for each program, platform, default brick sizes, etc., etc.? Short answer is, well, okay, I should give you the long answer because the short answer won't make sense. You receive in your download, it's actually very easy to download. And yes, everything is preset with default sizes. So installation normally is very simple. You just download it, load it onto your NinjaTrader, and away you go. If you have difficulty with the download, Ben is available to help you set it up. But yes, all the default sizes, everything is set to run out of the box. There is nothing you really need to do except install it. So that's the short version of the long answer. Jerome is asking, does Omar have a Forex trade room for the Forex? Not at the moment. Dean is asking about costs. Dean, I'm going to send you a link where you can find out all about the costs for these systems, because I'm afraid I don't have the costs off the top of my head. So you guys can follow that link if you'd like more information on the costs, or you can send Adam an email also. He will be happy to tell you pricing information, and ask him about bundles and specials and that sort of thing also. He always does stuff. I'm not always the one who knows about it. Okay, I'm just going through your questions, making sure I didn't miss anyone's question. If I did, please feel free to enter it again. Jerome is asking, how many instruments can one use, say like 28 pairs on the Forex? As many as you have screen real estate for, Jerome. I'm going to share my other monitor here with you in a second. Where are you? And you're going to see that I'm actually watching the YM and crude oil on the same screen. Come on. There we go. And what I do is, say if I get a scalp signal and I need to make the trade, I just enlarge the chart. But I can actually monitor two different markets that way. Okay, I hope I didn't break something. Okay, I think that came through. But yes, you can watch as many markets as you want. Normally I'll watch 3, sometimes 4. Like I said, it depends how much screen real estate you have. When you're starting, you really just want to be watching 1, maybe 2. Right? You want to get comfortable with your tools, and that's part of the reason that we do the trade room also, is just to get you comfortable with your trading tools. Okay, I think I've gotten to sure. Sam is asking, okay, first Jerome is asking, what does the monthly platform and data cost? Well, okay, here's the thing with NinjaTrader. It is actually free until you start using it to trade with. So once you start using NinjaTrader as your trading platform, you can either pay a monthly license fee or you can purchase a lifetime license. And I do believe the lifetime license is just under $1,000. The monthly fee, and don't quote me on this because I forget, I think is around $100 a month. But they would have that information at NinjaTrader. Okay, Sam is asking, can you please explain the trade manager's different stop loss setups if you have time? Absolutely, Sam. Let's go here to our hawk. Why not? So we have the ATR, which tends to be the default setting. Like I said, it's adjustable. So what I tend to do is I look at the ATR and I say, I'd like to see how it's following the market. If it looks like it's following it a little tight or too loose, I'll adjust it. So let's say it looks a little bit too tight to me. I'll adjust it, dial it back just a little bit until it's to my liking. If that doesn't look good, well, then I might look at a different stop strategy. So the ATR stands for average true range. I can also preview a stop strategy. I can turn on my preview and I can click on the next one here, which is a percentage stop strategy. It's a percentage of the range, and right now it's set at 0.20 of a percent. And these orange lines here show me how this strategy would be displayed. If I like this one better, then I just click accept, and then my stop strategy changes over to that. After that, we have, oops, went too far. We have the moving average strategies, and we have a whole slew of moving averages through here. everything from simple to exponential to weighted to some I've never even heard of. Let's see what the TEMA does. So here's the TEMA, and I'm going to click accept. Oh my goodness, that's the triple exponential moving average. Very, very tight. Obviously, I think I need to dial this one back a little bit. So there would be a 200 triple moving average. Still looks a little tight, doesn't it? Might be, oh, I don't know. I've never played with the triple exponential. But like I said, there's a whole mess of moving averages here to use. Swing high low is one that I like. What you do is you can dial in your swing strength. The higher the number, the stronger the swing point will be. And you can adjust it whether you want it to be above the swing high or the swing low. And how many ticks you want it to be off of the swing high or low. Normally we don't run our stop exactly at the swing high or low. Rather, we give it a tick or two. The bar high low is a very aggressive stop strategy. The bar high low follows the market very closely. And here, I'm going to accept this right now so that we can get some action on it. And normally with the bar high low, I do something like I'm going to follow a 2 bars back, maybe 2 tick offset. And what it does, I know it's flat right now, but it will, if we tick a little bit higher here, you're going to see it follow it up. It will actually get you out at the first sign of weakness. It's one of the most aggressive stop strategies that we have. And it's great if you're in a position where, say, you had a runner in play and you've accumulated a fair amount of profit, and now you're starting to get a little bit edgy. So let's say we took this trade higher, and we're way up here. We've got, oh, I don't know, a couple $300 in accumulated profit, but our stops are still dragging back here if we were using like an ATR strategy. With the bar high low, we could get a little bit more aggressive, and we could use that strategy, and it will run our stops very, very tight and actually get us out on the first sign of a reversal. Okay, so that's the bar high low strategy. The parabolics, a very popular strategy, also very aggressive. Parabolics always start off a little bit looser and then tighten as the trend is weakening. So also a good system to use when you've established a trade where you've got a fair amount of open profit that you want to protect. Super trend. Super trend is a blend of ATRs and moving average systems. It's essentially an average true range system with a little added sensitivity built in. And it will follow very much like an ATR system. Chandelier is another ATR strategy. It tends to be a little bit more conservative, however. The chandelier it's great if you have a market that's trending really well, because you can see it's very slow to roll the stops. So maybe not the best one for the scalper. It might do a little better on something like the Falcon Swing Trader. And last but not least, we have the fixed strategy, where we can, say, trail a stop, say 10 ticks off of the low, and it will trail a stop 10 ticks off of the low. Ian's asking, what strategy do I prefer for a stop strategy? A lot of times I'll go with the ATR. And it's a decent enough strategy. It holds me into most trades. I can always adjust the trade or adjust the strategy midstream. Like as the trade is progressing, I can always throw a different strategy in there. So here, for instance, this is our hawk. We're looking at a first micro-macro cross, but the market is all choppy. So what I'm going to do is I'm going to dial down my risk amount to 1%, and I've got my warning dot. I know with my logic counter, my hash mark is going to print right here. I could offer up another couple of ticks and take it above the high, and I could use the ATR stop as my strategy, and there would be my trade. If everything is to my liking, all I have to do is hit the submit button, and now this becomes a live order. And we'll see if they get up there. Actually, what I should do is I'll take it right on the hash mark. I see that one extra tick made a difference between two contracts or one contract. So I'll take it right on the hash mark, and we'll see if they get up here. You'll see how the trade manager will roll the stops for me. And if they don't get up there soon, I'll just punch into the trade so that you can see how trade manager manages the position. Yeah, Anne says Ninja is free with some brokers. That's true. But I do believe, well, every broker is different. Sometimes they'll comp you a data feed. It depends really how much business you do with them. Jerome is asking, what is a minimum dollar in one's account to trade contracts? Most day trading margins are in the neighborhood of $500 per contract. So if I took this NQ trade, I would need $500 in my account. Some are a little bit more, some are a little bit less. It's when you start holding overnight positions that you get into the really big money. Like I believe crude oil, to hold an overnight position in crude is somewhere around $9,000 right now. But to hold an overnight position, say, in corn is about $1,200. And it looks like they're yeah, I wasn't going to mention this, but Jerome brought it up, so I'm going to mention it. Jerome is asking, can I use the Raptor to find signals and place my orders on another system? Yes, you can. Yes, you can. I'm just adjusting the order here because we've got a new warning dot printing a little bit lower. But yes, that is an alternative. You can use the DTS tools, whether it be the Raptor or Hawk or Falcon or Eagle, to generate your signal. And if you're using MetaTrader or Thinkorswim or one of these other platforms, you can certainly enter your trade using those systems. All right, very much in sideways mode on the NQ. We're working on a trend change signal here to the upside also. But honestly, I think we're going to see this market fail again and head lower. It's just a whole lot of sideways action. Oh, should have been looking at crude oil. I just glanced at my crude oil chart, and I see here the Falcon made a nice little progression lower off of a trend change signal. Also, well, no, not really a late filter entry, but a trend change signal right here. Nice little move to the downside. now that it's violated the primary support, we would expect it to get down here to the next support line. So it looks like 52 might be a probable target for crude oil. We'll see how that goes. Okay, I wanted to show you how the trade manager manages the stops. So what I'm going to do is I'm going to punch into a trade here. Now, this is not a real trade. This is not a real trade signal at the moment. I'm attempting to show you how this works, so please don't take this trade. Let me see if it's just going to tick up a little bit here. I haven't decided whether I want to buy or sell yet. Oh, actually, let's sell it, because I think it's probably going to go lower. I'll go off of the high. There we go. Oops, got to enable my stop. Oh, shoot. All right, here, let's close this out. Let's try this one more time. All right, I'm going to change the order type. I just want to show you how the stop strategy works, that's all. All right, there we go. Okay, so now we're short, and hopefully this will tick lower, and you're going to see how Trade Manager is automatically going to take my stop and roll it down. Come on. Crude oil prices are falling. You know you want to come down too. Let's go. Chris is asking, is there a way to trail the stop systematically 3 ticks behind the ATR? Yes, I think. No. You'd have to go with a different strategy. Or you could adjust your ATR so that it would be approximately 3 ticks off of the ATR line. Normally, it's just a matter of dialing it up a little bit. So the default is 2.618 because the programmer had a thing for Fibonacci numbers. Oops, we don't want to engage that just yet. So if you could eyeball it. You could say, okay, 3 ticks off is going to be right about there. Well, normally all you need to do is dial it up a few ticks, and that will get you to where you want to be. Okay, but I really want to show you how it automatically rolls the stop. Somebody get in there and sell a whole bunch of the NASDAQ. Jerome is asking, do you have any live seminars this year? Well, that's a great question, Jerome. We have been kicking around the idea, but nothing is scheduled just yet. If that is something you think you would like to see, Adam is the guy who makes that sort of stuff happen. So I'll send you Adam's email again, adam@indicatorwarehouse.com. Oh, come on. If I could just get this to roll 1 tick. Well, it looks like as far as trading goes this morning, crude oil was the only market worth watching. And even that had its ups and downs, but at least it had some ups and downs. Oh, are we just about to roll? Are we just about? Come on. Oh, man. Come on. Come on. Get in there. Oh, great question here from Hans. Hans is asking, when I'm in a trade and the risk manager is taking it over, can I shut down my PC? No. No, bad idea. These orders are live at the exchange level. So let's say you shut down your PC or you lost power or something, you would still have an active stop at the exchange, and you would still have an active profit order at the exchange. However, Trade Manager would not automatically adjust your stops. That it would not do. Likewise, when you're in a trade like this, not that you need to know this right now, but don't do something like reload NinjaScript or reload historical data. Your trade will disappear off of your screen, but you will still have it at the exchange level. And what you're going to end up doing is you're going to end up going to your control center, and you're going to have to manage your trade manually, either just by flattening everything or manually entering an order to buy or sell or offset or whatever it is you're doing. A real pain in the butt. All right, just a couple more minutes here. I'm just dying to show you how the Trade Manager rolls the stop just once, and they're not going to give it to me. So I think you guys are going to have to take my word for it. Hans is asking, Hans is full of good questions this morning. When I buy the program, do I get training in the trade room for the risk manager and all the other essentials? Yes, absolutely. As a DTS owner, you have unlimited access to the trade rooms, and I answer all your questions, and we try to find market opportunities, and I try to show you how to use the tools. I try to teach you why some signals are better than others, why we focus on some signals more than others. Oh, come on. But you know, this is how the NQ has been the last few days. It's just nothing. We also have a lot of videos archived and on our YouTube channel. So you can always follow them at your convenience. If this time zone does not work for you, or if you have other commitments at this time, then you can always watch them after. The trade room, Hans, is 5 days a week. Wednesdays we do the open house. So Monday, Tuesday, Thursday, Friday is exclusive to DTS owners. Wednesday we do our open house, and I do the little summary of the trading tools, and I try to, if the market permits, actually show you a signal or two. But it is not cooperating right now. The YM is actually folding over faster than the NQ, but that's kind of how it's been of late too. Wow. Okay, Jerome, you're having trouble getting a hold of William for Forex. What you need to do is you need to email Adam. I'm afraid I don't have an answer for you why you would not be getting a response. If there is something I can help you guys with, if you have any questions about the tools or about trading in general, feel free to email me. My email is eric@supportandresistance.com, and I'll send you that. I do my best to get back to everybody within a day, but I got a little overwhelmed the other week. So if you've written me and I haven't wrote you back yet, it's just I'm trying to dig my way out of all these emails. Oh, come on, just a couple more ticks. All right, you guys, you're going to have to take my word for it. It does roll the stop automatically. Oh, here we go. Here we go. Oh, did I not engage it? Oh, Eric, you knucklehead. After all that, I forgot to engage it. Okay, there it goes. It does roll the stop automatically, though. And this, like I said, is the bar high-low. It's the most aggressive of our stop strategies. No, Anne's asking, you shorted a green candle. Is it normal on this chart? In case anybody missed it, no, this is not a trade. This is not a trade, folks. I was only doing this so that I could try to show you the trade manager automatically rolling the stops. This is not a trade. Do not follow this trade. This is not a trade signal. Jerome is asking, where can I see videos only on the Forex for the Raptor? I'm not sure we have Forex exclusive Raptor videos, but Adam, if we do have them, Adam will know where they are. Yes. Yeah, Anne says, I was just wondering why you didn't go long. Yeah, that's why, Anne. I was just trying to get this trade manager to roll the stop automatically. But the darn NQ is a little reluctant. In fact, we're working on a possible buy signal for the NQ, a macro pullback signal. But you know what? For the way this market is today, quite honestly, it's just a little bit too range bound. You can see right out of the overnight session even, we've been confined to this larger trading range. And until we get outside of that, I'm not sure that it's really worth our bother. All right, you guys, I am going to close up the room now. Unless anybody has any other questions, please type away and I will stay and answer it. And once again, don't forget about that special that we're having right now. If any of those indicators that we were looking at today were of interest to you, you can get them at a discount this week. Don is asking, is the discounted special good for the system add-ons as well? I do believe so, but don't quote me. That's out of my jurisdiction. Adam is the fellow to ask those types of questions to. He is familiar with all the pricing, with all the packaging, and he can certainly help you with that. Jerome is asking, trade room is from what time during the week? It is from market open until lunch hour. So that is from 9:30 to 11:30. Well, thank you, Bryce. Bryce says, it's been fun. Tell them to find a way to get this on Thinkorswim. I don't have an account with NinjaTrader. I will pass that on. Well, thank you, everyone, for your time. I do appreciate you taking the time to join us this morning, and I hope you found the time helpful. And like I said, if you have any questions, don't hesitate to shoot me an email. I will do my best to answer them for you.